The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 31st magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can call in right now, 877-927-6648. If you can't get to a phone, which is basically nearly impossible, but if you can't, because you're working, doing something, you can always send me an email, steve@tfnn.com. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 91 points. She's trading out at 21,921. S&P is up 1.5 trading at 2473. The NASDAQ 100 is struggling off 21 points, trading out at 5888. Russell is down 4.5 points, 0.3% as well. She's trading at 14.25. Semis are off about 0.5% or 5 points to the downside. You've got gold off $2. Silver is up 9 pennies. Light sweet crude is off 39 cents. Leading the charge here to the upside individual stock-wise, it's Charter Communications of $16. AutoZone is up 8. Sohu is up 740. Dynavax Technologies up 7, Baidu up 6. To the downside, Amazon is off $25, trading out $9.94. We'll certainly look at that. We'll look at the NDX for sure. Google's off $14. Regeneron is down 13. Clovis Oncology off $12. Intercept Pharmaceuticals down $11. Tesla is off 7. So, but of course, I want to take a look at what you want to look at without any requests thus far. Let's just go take a look at the markets. And one of the questions should be, with the Dow moving higher, the NASDAQ moving lower, is this some kind of a top out here? And let's answer it this way. And then we don't have the answer. Well, let's answer it this way, though. At the moment, the answer is no. We don't have a signal to suggest that. Now, the reason why I paused just a tad, here's one thing that you and I know about the beginning of every bear market. There is a signature. There is a pattern. If you hadn't done the work, going back into the 1890s, of course, we were looking at the Dow, going back into the 1890s, if you hadn't done that work, you wouldn't believe it, just how easy it is to be able to generate a signal that, in fact, let's start with the Dow. We'll come back to the NDX 100 out here. Hopefully the system responds a little bit faster. Dow Jones Industrial Average out here. And that's a weekly chart, by the way, that we're taking a look at. But one of those patterns, one of those signals present at the beginning of every single bear market in the history of going back and taking a look at all of these stock charts out here, specifically with the Dow, since we've gone all the way back and we've done that work, you and I. And we know that price moves higher, does with less relative energy, which is different than this blank screen that we're looking at here. I don't know what, there we go. Now, what we can see, and Stevie has built this in to make it easy for you and I to identify that pattern. When you start seeing black diagonal lines, in this case here from lower left to upper right, when they start drawing to candlesticks, the top of the candlesticks out there. Now, the presence of that pattern alone is nothing more than a warning sign, like somebody saying, hey, there's a 90% chance of rain. I spent the weekend in New York, and before I left, there was a 90% chance of rain on Saturday. So, of course, I took a couple of umbrellas up there. Did we need those umbrellas? The answer was no. Turned out to be a beautiful weekend out here. Well, there's a chance of rain if we take a look at the Dow. But that rain, when it comes pouring down, well, in the stock charts that we take a look at, that pouring down is an actual bearish reversal signal. Do we have it right now? No, in fact, actually, today's open inside the Dow is a bullish signal, not a bearish signal. How can you say that, Steve-O? Very simply, you had price gap up, catching up to the futures market out here. And when you take a look at a stock or an index and you see a gap out there, gaps are your friend if you're on the bullish side. They're also your friend on the bullish side as price comes back to a gap, because that is like coming back into a little breakout area. Now, we don't know if those gaps will hold or no. And although, yes, they can become targets, the reason why they can become targets to the downside is because price is simply coming back to a breakout area. Now, when the Dow made its most recent bottom out here, this is back in February. When I say most recent, if we take a look at this stock chart that you and I are looking at out here, back in February, you can see the price was moving lower, doing less relative energy, and then back during the week of January 25th out here, you saw that nice little bullish hammer candle. And if we take this stock chart back further, we try to find the 2007 top out here. Here's the 2007. Here's a nice big old reversal signal. This wide-ranging bar to the downside back in October. Again, price was moving higher, doing less relative energy out here. If we go back and we take a look at the 2000 top, as long as my system will, there we go, it'll let us go ahead and do that. Come on, get back to 2000. Here we go. You can see when we see the top here in 2000, again, the same signal. Now, you and I, we're not going to do this. We're not going to waste our time going back to every single bear market that started just to prove again to ourselves that this is, in fact, a signal that we would be looking for. We don't have to do that. So in the Dow, it's a potential till you get a bearish reversal signal. And I'm not trying to call the top tick here for you, if in fact that's what we are about to see. If we go take a look at the NDX 100, this probably takes a moment or two to go ahead and populate. That was a chart that we had up on the screen earlier, and we're going to spend some time there. We'll spend some time in both of these areas. Here, the NDX 100 is moving higher, doing less relative energy, but we do not have any type of bearish reversal signal. If we go back and we take the NDX as an example, come on, see if I can grab this. We go back to 2007. Here's your bearish reversal signal.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So a question that just popped up here in the den says, Dow Jones Industrial average daily. What say you, SR? 21,925 high right here. We're trading 21,916. Monday, up close will present a 912 count, one count away from the sequential sell. So let's go. And he's referring to the Tom DeMark system out here. Let's put the Dow Jones out here. And give me a moment here to populate it. So I actually would have today as a 11 count out here, but that's what that's what's showing up on my system. But that's neither here nor there, whether those counts are on or not as we speak at the moment. What we can see here inside the daily chart for the Dow is you can see that as this has moved higher, this has continued to stretch to the upside. Therefore, we have that price relative strength divergent pattern. Now, we did get a confirming signal of a top right here, right on the trading day. It looks like of July 19th, July 18th or July 19th, when that formed both an evening star. That's a three-river evening star, so it's a three-candle formation. Can take more than three candles, and as well as it was a gap to the downside, and never did confirm on the very next trading session. The one thing you like to see on any trading signal that gives you reversals, you like to see follow-through on the very next session. We didn't get that, and price closed right back above Stevie's red line out there. That's on the daily chart. So we still have price moving higher, trading at 21,916 as we speak right now to the upside. And so a bearish reversal signal would say the potential for a retracement. You'd need to see a bearish reversal signal on a weekly basis to give you that type of confirmation of some type of significant decline that we would normally see, quite frankly, that we would normally see on average. On average, the Dow makes the top on July 21st. Today is July 31st, 10 days later out here. Is the seasonal pattern still in play? I don't know. It could be. I haven't ruled it out completely because we don't necessarily pay attention to that to the day. But as we speak right now, there's only the potential, no confirmation of any kind of top inside of the Dow Jones Industrial. If we go take a look at the equity futures contract out here and take a look at its signals, let's go see what we can find here. And this, we're going to take a look at a 30-minute chart, a 60-minute chart, a 240, a daily, and a weekly. Now, as you look at us on watch us on Tiger TV, with the exception of the 30-minute chart here, you're going to see nothing but green shoots, right? All of the these aren't candles, but all these bars, in fact, are green. When you see them as green, they mean and green. They are bullish out here. Now, this system, unlike price moving higher, we're doing less relative energy, this system will not go ahead and identify a market top or a bottom. But it will tell you when you have a confirmed change in trend out here. On the weekly basis, in order to get a confirmed change in trend, at a minimum, what you need to do is break below at least a little rising trend line from the November 7th levels. So you take the bottom of November 7th, you go ahead and match that up with the bottom of May 15th out there, and you'll have that nice little rising trend. Then if, in fact, that were to fail, you'd be looking for that larger rising trend line, the one that begins all the way back here on January 18th, 2016, and as its next touch point, you'd use November 7th, 2006. Now, those are weekly charts that we're taking. Like, and those dates I gave you were the beginning of the week. That's just simply the way that E-Signal does it. In the case of the Dow equity futures contract for the daily time frame out here, its level of support, just simply support, is 21,628. The real level of support inside of the Dow is 21,420. That's 430 points, 40 points away from where we're trading right now. So that would be a pretty decent decline just simply to come back to support. But nonetheless, that is support inside of the Dow equity futures contract on the daily time frame. Inside the 240-minute time frame, you're looking right now at 21,702. That is 140 points or so from where we're trading right now. On the 60-minute time frame, you would need to see a close below 21,805 out there. And if you're going to do that, if it's going to do that, you're going to see price moving back to 21,700. And inside of the 30-minute time frame for the Dow equity futures contract out here right now, 21,849 would be the minimum number before it could even give you the inkling of a pullback. And then what you really need to see is a close below 21,815. So we'll call it that 21,805 to 21,815 as we speak right now, 123. These numbers can change over time as time goes by because we'll see new profiles form. Now, if we look at a 30-minute chart here for the Dow equity futures contract, I know we looked at a 30-minute chart with regard to its market profiles, but here what we can take a look at is price moving higher, doing less relative energy. So that pattern is present, but no bearish reversal signal as we speak right now. So there's just simply no indication that a top is around the corner inside of the Dow, and that has been the strong link, so to speak, as we speak right now. If I take a look at its advanced decline oscillator reading, that's going to be well above zero. As soon as we click over to that chart, come on, there we go. That's going to be panel number 3 out here. So there's no indication there that there is a problem. We do have the advanced decline oscillator reading inside the NYSE down below zero. But yet we are near the highs out here. So we've got a bit of a divergent pattern here. The meaning that I would take from the New York Stock Exchange, if you're going to use the New York Stock Exchange as a guide as to what the market is going to do, one might say, hey, that oscillator reading is down below zero, Steve. That must mean that sellers are in control. And I'd say that would be the basic premise that you could form. However, if that were the case, why are we up at highs? The reason is because I believe what is forming right now is what's called a simple structure. There are some things that are pretty simple when we take a look at these technical patterns out here. And by simple, that means tomorrow or the next day, we'll see that price oscillator above zero, saying that what we were just looking at here was nothing more than a head fake. That is the pattern that is in place right now versus saying that sellers are really in control of, we'll call it the broader market by taking a look at the New York Stock Exchange out there. The NASDAQ Composite, the NDX 100, a bit of a different story. Inside of the S&P 500, really be the SPY that we would be, or not the SPY, it would be the VIX index, the spot VIX index. Let me see if I can do it this way. Let me see here. And pointed out to me in the den by our man Z that the top 100 stocks inside the New York Stock Exchange right now is at a new all-time high. So there's another and an even better indicator that what I just shared with you about this simple structure that looks like it's forming down below zero line of the advanced decline oscillator reading for the entire indice is in fact forming out there. With regard to It's not going to make that much of a difference out here. But what's likely to happen is we're likely to see the spot volatility index make it down to about the 975 area. Right now you're trading at 1050. If in fact that is what's going to occur, you're going to see the S&P 500 continue to move higher out there. Just the S&P 500. It's not going to tell us anything about the NDX or anything along those lines. But we don't see a top inside the Dow as we speak just yet. Inside the so speaking of the NASDAQ or the NDX 100 or the NQ, let's go take a look at the NQ here. Let's do this by taking a look at the 30-minute chart. Or maybe what we'll do is we'll do that when we get back from this breakout here. We've got a couple of hammer candles that have formed as it has made its two most recent lows on an intraday time period, the 30-minute chart. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So before we go back to the NQ and take a look at the intraday time frame charts out there, we got a email sent in from Robert, maybe Robbie. Robert says, what about the Dow Jones transports, question mark, because the transport aren't buying any of this. I mean, a little bit of Dow theory up there. And, of course, it was kind of him to say, just saying. And Robert is exactly right. The Dow Transports, as we take a look at it right now, we can see that the Dow Transports, that's going to be now it's a weekly chart that we're looking at on my screen out here. Easier to take a look at a weekly chart, maybe to do a little bit of historical analysis out here. So on a weekly basis, July 10th, 2017, the week that began, is when the Dow Transports have made their high at this stage, 97.63.66. And what we can see here as the transports have moved back, the Dow Jones Industrials has continued to move higher. Now, one of the things, Robert, and things I would share with each of you is, remember, the trend is your friend out here. And so let's go back and take a look at a couple of trend-based lines out here. Let's take a look at the shortest one. The shortest one, I guess I should turn this off. Let me see if I can do that. I mean, I know I can do anything. That turned that off. The question is that going to turn it off there? No, that didn't work. Let me see here. How do I do that? It'd be nice if I could just know which one of these. There we go. Okay, I've got it. Okay, so now, Robert, hopefully you're watching this on Tiger TV. If not, go check out the archive. I think it's on Channel 9 to be posted in maybe about a half an hour out here. So just simply with regard to the transports, there's nothing that is wrong inside the transports as we speak right now. Coming off of the low in January 2016 and using that as our touch point, that's January 18th, the week of what I would also use, the week of June 27th, 2016, you can see there's been no trend line that has been broken. In fact, the longer-term trend lines, those are the ones that I turned off out here, we're not anywhere near breaking those trend lines at all inside of the Dow Jones Transports. Here's an even shorter-term trend line. These are the green diagonal lines on my screen. So the very first thing for us to take a look at, and anything that's pulling back, is, has really the trend changed? The second thing that I would note to you is that the Dow and the transports, when they're making highs, don't generally top at the exact same time. And I think that is exactly what Robert's point was, is that he says the Dow's not buying this. And he's right. But take a look at, coming back here, I'm just going to come back to the 2000 top out here as an example, because we'll go back a little bit further, because it's an excellent point that was brought up. Remember, we're just a few weeks into this decline. No trend has been broken. Versus in 2000, you see the red diagonal line on my screen. We can see where the trend was clearly broken, and that did identify a. That's a trend line just inside the Dow. Forget about the trend line inside the transports. But here's what I want you to notice: is that back in 2000 was actually May of 1999, May 10th to be exact. That week is when the transports made their highest high. That highest high, by the way, was 37.97. It was 35 weeks later. 35 weeks. It was more than a half a year before the Dow Jones Industrials actually formed its top. And what we know about the top in 2000, Robert, is that it was doing so with price moving higher, doing less relative energy. That first chart that I put up on my screen from a weekly standpoint, perhaps the most important chart for each person out there to totally wrap their head around the meaning of the difference between, hey, this is just your garden variety type retracement versus this is some type of significant top out here. It works that way sometimes in the bottoms. Here when the bottom formed back in 2002, by the way, this was March of 2003, we saw the transport, the Dow bottom 22 weeks earlier than the actual transports did. Now, I believe if I pull this back a little bit further, we'll see here that the for 43 weeks, this is 43 weeks, takes you back into February of 1994, Robert. Here's where the transports had topped. They continued moving lower for 43 weeks. It didn't lead to any type of big, significant downturn inside of the Dow. Just simply ignored it. Dow never broke its trend line. So there are a lot of people that'll be out there selling you a ton of snake oil or something out there, and talk about the fact that the transports are not confirming this. I just suggest go back and do the work yourself. And what you will find, okay, when you do this work here, you will see the exact same pattern that you and I are looking at. That way, you will have more conviction with regard to what that means, and you hear somebody on the tube go ahead and say that, you're going to go tell them to go do the work out there. If we take a look at the transports back in 1989, when they formed a top out there. This takes you back into August of 1999. The transports moved lower for 47 weeks. 47 weeks before the Dow actually formed any kind of a top out there. So are we going to worry too much about the fact that the transports are pulling back and that they haven't broken a trend line and it's only been about 3 weeks out there, and that means that we should go ahead and sell the Sam Heck out of the Dow, or that the Dow is not going to move higher? I would suggest the answer is absolutely, positively not. Now, let's go take a look at the NQ out here. One of the things you do want to watch for, and I mentioned these hammer candles that formed here recently. Back, it's about 6:30 in the morning. This is on Friday. I'd already left for the aeroporto. We saw a nice little price moving lower, doing less relative energy, nice little hammer candle. It had confirmation, follow through on the very next session. That led the markets higher. Now, there's probably many of you out there at 6 or 6:30 in the morning believe that the markets were just simply going to continue to crumble and keep moving down. I know there's at least one person out there that believed that. But I also know that one person was familiar with this pattern. And that person looked at this and said, you know what? Stevie taught me about this pattern. And so I'm not going to get faked out here. I know that price moving lower with less relative energy, followed up by the cavalry, same thing that you and I just looked at on the longer-term chart. You see it works on all different time frames. You just have to figure out which time frame it is that you want to trade out there. Exact same pattern. When the NQ made its most recent high out there, it was the exact same pattern. These things repeat over and over and over again. Now, nice little hammer candle that formed at the lows there on Friday morning inside of the NQ, about 6:20, 6:30 in the morning. What happened here earlier, if we can get that screen to pop up, we had a hammer candle form a couple of hours ago. Now, you know what they say about, now, in a hammer candle, you've got the market trying to hammer out a bottom. This one occurred at 11 o'clock this morning. That says if you close below the low of the hammer candle, well, of course, we would say if you're long, you're wrong out there. However, we wouldn't completely say that. We'd have to say, well, son of a gun, there was a hammer candle back at about 6:30 in the morning on Friday. That's the hammer candle that's most important, in my opinion, because if you take that out, then you could be forming an A to B equals CD to the downside, even in light of the Dow continuing to move higher. Two different indices out here, different components with inside them. You just simply have to stay glued to each. And inside of the NQ, did we look at the profile levels out there to be watching? I don't think we did. I think we just looked at the Dow. So it would make sense that I would go ahead and give you the profile levels to be paying attention to inside of the NQ. And we'll go take a look at the emails. We'll see if there's any other postings inside the Tiger's Den. And if not, we'll find something to take a look at. See if it's TFNN.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So one of our wingmen in the den, we're going to take a look at the NQ here, but pointed out that the NQ is headed towards the low of the day out here. So let's just take a look at the 10-minute charts, and then we'll go take a look at those market profiles, because there's lots of information that's packed into us here. Just basic swing point analysis, that which Tom first talked to both you and I, and you know how Tom loves that 10-minute chart out here. And if we take a look at the 10-minute chart here for the NQ, the actual low of the day came in at 10:30. Now, during that 10-minute session, price was pushing lower with 14,000 contracts. Now, in this most previous wide-ranging bar that finished about 3 minutes ago, 3.5, 4 minutes ago out here, price was pushing lower with 4,800 contracts. What are the chances that this is going to go ahead and bust out the lows? What it looks like is setting up, and we know we've got those hammer candles on the 30-minute basis, is nothing more than a test of a swing point on light volume. Not that it can't bust it, but what we do have is a wonderful piece of information that is brought to us. And so what you should anticipate and expect is that what the NQ is doing, it's just reaching another level of support and doesn't have the enthusiasm to go ahead and bust out those lows. That's just simply taking a look at the 10-minute time frame. Now when we switch over and take a look at the market profiles out here, we're not looking at a 10-minute market profile. What we are looking at is the daily time frame. The daily time frame, the bottom of its box is priced at 58.72. We're trading at 58.73, we'll call it. We're trading at 58.75. It was tested during the breakout there. So there's a level of potential support. There's also another level of support on the 4-hour time frame. Now, that first level is at point of control, 58.75. So we've got another area, and at the point of control is the spot where you have both bulls and bears lined up. So they are telling you that this is their fair price auction inside the profile. That extends from 59.35 to 58.59. So 58.59 would be another real strong area of support. And we say strong because as we take a look at that 4-hour time frame out here, that point of control is closer to the bottom of the box. So 58.59 should be really strong support. And that's where the messages are coming from inside the NQ as we speak right now. They're not coming from the 30-minute. They're not coming from the 60-minute. Although from the 30-minute, you and I did glean the hammer candles that were out there. So we know that the bulls are trying to, they've identified areas where they believe is the price where they can come in. Whether they get trampled or not, I don't know. You don't know. We just know that there's not much volume pushing their way down as it was at 10:30 this morning out here. So I don't see any other questions. I'm going to take one quick peek here before we move on to the next thing, which is likely gold and the yen, because we know that there's got to be questions about that. It doesn't have to be, but there probably should be. And as we take a look at it, let's start by taking a look at the yen effect. Let's just go back to this. And let's look at yen futures. The reason I like looking at the yen futures is, one, I don't have a delay while you and I are on the air live, so that's helpful, versus you don't really want to know what happened 15 minutes ago. You want to know, hey, Steve-O, what's going on right now? Now, in this case here, the other nice thing about taking a look at the yen futures is they directionally are moving in the same direction that you and I would take a look at for gold. So as these are moving higher, gold should be moving higher. And looking at the 60-minute time frame out here, what the yen has done is bounced up to the top of its 60-minute profile. That's at 90.80 out there. If you take that out, that says that it wants to move higher. The same thing in the 4-hour chart out here. You've got 90.69. So if you, and we are trading above that, so that's taken out a level of resistance. There's no resistance on the daily. There's no resistance on the weekly. All of this suggests to you and I that the yen wants to get up into this 92 area. That's the daily most recent swing point for the trading day of June 14th. And if, in fact, that's what the yen wants to do, well, then Goldilocks should continue to move higher. So as we go take a look at its market profiles out here, we're going to see the 60, the 240, the daily, and the weekly. And in the case of the weekly profile out here, it's suggesting to you and I that 1283 is the next target, 1283 to 1293. As we look at the daily, there's nothing here in the daily chart to show us any kind of resistance other than the previous swing point, which just becomes a target, and that's priced out at about 1302. That's a trading session of June 6th out here. On the 4-hour time frame, it says a bit of resistance at 1273. That's the same resistance level on the 60-minute chart. So what you really want to be watching for, if the yen is moving higher, then in fact the gold should move higher. Watch that price point at 1274, we'll call it, because you got 1273.70, 1273.90. You get about 1274, that's just simply a signal that you're going to see another $10 to $20 higher inside of Goldilocks. Now, is it possible? Is it possible? Here on the NQ chart, here's what is likely occurring inside the NQ. That's still forming an A to B equals C to the upside. Big old bearish engulfing candle. Big old key reversal type session that occurred back on July 27. No doubt about that. You can see the daily market profile. This is a daily chart that we're taking a look at. And if, in fact, price closes below the bottom of that box out there, again, the bottom on the daily time frame is 5872.90. We're at 5876 as we speak right now. That could change this pattern a tad out here. But just testing the level of support, bouncing off of support, that would be, and we know on a 10-minute basis we had light volume out there, you know, that would just say, hey, we're just struggling by moving sideways. Maybe we're just waiting for Apple to release their numbers. I believe that is tomorrow afternoon about 4:30 when those numbers will come live out here. But the price objective of 61.13 is still in play as we speak right now at 148 in the afternoon. If we take a look at the mining sector, we take a look at the GDX out there. GDX right now trading at 22.97. This is going to show you both the daily and the weekly profiles out here. This is suggesting there is no bearish signal inside of the GDX. It's coming into a little bit of a wall of selling. That was on the trading day of June 14th. But this signals to both you and I that the hey, if the yen continues moving higher, if gold continues moving higher, well, it stands to reason that the GDX should continue moving higher, with its next price target being 23.71. Of course, we know this is a weighted ETF out there, and Barrick Gold, ABX, was the troublemaker here when it was moving lower. But what we can see is that ABX during the course of the last couple of days out here has in fact moved higher. Now, the key area for Barrick Gold is going to be the top of this daily box. 1712 is the number. That also is coming into really a swing point as well as a downdraft. The swing point is May 17th. That had 21 million shares. You're only up today with 5.8 million shares. Not likely that it's going to go ahead and bust above that. And you've got that downdraft inside the GDX from April 25th. There were 51 million shares there. So what does this suggest to you and I? It's got to get its signal, most of its signal, from gold. It's not going to do anything until you see the yen break above resistance, until gold break above that next resistance level. And if, in fact, that happens, then you can see the GDX try to make its way up to the 1766 level. That's going to be the so-called make it or break it area, because that is the top of the TAS weekly profile. That's in Barrick Gold. Do we need Barrick Gold to bust through there in order for the GDX to move higher? No, because you've got stocks like Franco-Nevada, you've got Goldcorp, you've got AEM, Agnico Eagle, you got Kinross Gold, you got Royal Gold, you got a lot of gold out there. Hey, I saw that painting, Woman in Gold, on Saturday. That's a very cool painting. She wrote TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So let's see. There was a request to go take a look at the euro out here for Danny in Atlanta. So, Danny, let's actually look at the currency pair. No, let's do this. Let's go back, even though we've got a 15-minute delay for you, because I don't know if you're trading this. And even if you're not, somebody else out there might be trading it. But let's go take a look at those 4 different profile time frames for you. And here we've got the 60-minute time frame. We'll go back to the other chart because there's a huge breakout that is taking place inside of the euro. And here when we take a look at the daily, weekly 240, 60, you see nothing but green shoots out there. Again, we're on a 15-minute delay, but This is just simply moving higher, and in fact, there's no profiles on here that mean a hill of beans to you or anybody else as we speak right now. The real breakout that formed out here, we need to turn off. Let me turn off some of these lines out here. Let me turn off these TAS boxes, since we already said they're basically irrelevant as we speak right now. And let's get this to I think the weekly time frame shows this the best. So what the euro appears to be doing, until proven otherwise, it's clearly broken a long-term consolidation. Now, this is a weekly chart. So there's been a consolidation underway for over 2 years. January of 2015 is the area that it's cleared. Now, there was a nice bearish reversal signal here, this little shooting star on May the 2nd. Again, a weekly chart began the week of May 2nd, 2016. Once that high was taken out, 116.16, or 118.22-ish as we speak right now, what that identified for us as a break of a consolidation. Now, the cool thing about any consolidation pattern is, you want to buy it at support, that's the bottom. You want to sell it at resistance. And when either of those get broken, you want to get the heck out of Dodge. You want to flip the trade, because what it tells you is you now have a momentum trade out here, which suggests that the euro is going to head up to $1.28. Now, that's going to put a heck of a lot of pressure on the U.S. dollar index. And this pattern will stay active until proven otherwise. Well, we just looked at very quickly some market profiles. We didn't see any kind of resistance there. So this will stay active until you start staying closer below the bottom of boxes. This would also stay active until you see price get back inside of the consolidation. Can it happen? Absolutely it can happen. But the message of the markets at 1:56 in the afternoon is that eventually what the euro is targeting is the 128 level. Having been out of town all weekend, I simply didn't take my computer with me. I didn't have time. Was too busy doing things, such as going over to Ronald Lauder's museum, the new gallery. It's a great little gallery to spend several hours at. And I think it was Gerstel. Basil is the artist that is this other Austrian artist that is on display over at his gallery out there. 25-year-old kid. Had some interesting pieces of art out there. If you're into art out there, and he was the ambassador. So he spent $135 million on that painting. Let me tell you, it was pretty crowded for his. He's seems like he's doing pretty well, but his mom. I mean, they've been collecting art for a long time. So that's just the deal. In any event, out here, Danny, I hope that helps you out with regard to what the euro is doing. Just simply looks like it's going to scream higher. And of course, the euro being the largest weighting inside of. It looks like I lost my internet connection again. I hope that I'm live here. Hey, that's the end of the show. It doesn't matter. I'll see you guys tomorrow. Take care. Bye-bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.
47. Didn't think before deciding why.